Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today, we're taking a look at the gold futures. Now, gold overall had quite the rally to the upside, completely negating yesterday's just kind of slow, choppy, sloppy, not a whole lot going on. Today, it really kind of broke out of that. Really big upward momentum and everything rallying to the upside, showing the buyers had quite a bit of strength. And it really started kicking in as soon as the market opened. You know, it opened at 6 p.m., kind of went sideways for a little while, and then shortly after 8 o'clock, it just kept going up and up and up and up. So really looking at buy side only. That's the only thing that really matters when we're looking at this kind of environment. It's just a matter of where you want to start looking to get in. Now, after a rally has been going on for so long, likely a lot of buyers are in from back here, they bought back here, they bought the pullbacks, they've been in for a while. We're coming in a little bit late to the party because the US session doesn't start for us until around 8 o'clock. So we need to find a way into the market that isn't so, excruciatingly high. It's really tough to buy way up here in hope that it goes higher, and you can see every time that did happen, well, it didn't go very high. So there definitely is a little bit of a bias on trying to buy at good of a price as possible. Now, when we start getting a pullback, we pull all the way back down, very aggressive selling pressure, and that is likely going to get some sellers interested. Sellers will begin selling underneath that bear candle, since it is, literally the biggest bear candle of the entire day at that point in time. So when we're looking for some continuation, we really want to see the sellers jump in so we know that there is a potential to get them trapped. Now, we don't know if the trend is going to completely reverse and pull all the way back down to a new low, or if this is just a pullback. But given the overall sentiment that we have to give the onus to the buyers. They own the market, and it just makes sense that they're going to continue to buy into it, just at better prices. We pull down and we trap the prior swing low right there by just a couple ticks. In the case of the actual to the tick swing low, it went under it by 1 tick and then turned right back up again. So with that huge amount of bullishness coming in right off of the trap low, likely a couple things happened here. The buyers who've been in all the way since, 6 p.m., they're trailing their stop up along the way, just thinking, hey, I don't want to give any of this back, but this could keep going on for the next week. So we want to try to trail the stop up aggressively with it, and this would have tapped them out. Along with that, a lot of sellers are going to be looking at this thinking, wow, this big bear candle, look at the follow-through candle, everything is pointing to the downside, when in reality, there really isn't much market value being seen on that drive lower. We're not seeing that value increase in comparison to the force. The force is falling, but we are getting a quick spike higher in value. So what we're getting here is essentially a trap. They trap the lows, and that allows the buyers to push right back up and slam the market to a new high. Now, because that pullback was so steep and buyers did get reloaded, right? They were able to buy that prior swing low. They were able to buy pretty much anywhere inside of here. That basically tells us that there is a very good chance that if this doesn't slam through the high and just rocket up, we could just transition into a range. And that is, unfortunately, for the market, what happened. Went a little bit sideways and just kind of got stuck. So we can see the overall range-bound sentiment that we're kind of stuck in right now. Sellers are trying to break down the lows. Are they going to hold it? Probably not. It is a range after all. Buy low, sell high, and fade the breakouts because you don't believe them. But overall, just a great combination of market psychology in combination with technicals and understanding that the trend doesn't just turn on a dime most of the time. Sometimes it does. In very few situations, you'll see a trend that is looking nice and strong and it just goes boom and slams the other way. But for the most part, trends have a pretty methodical approach to them. They go up, and then they go range-bound, and then they decide what they want to do. So very likely that reversal is not going to work, and sure enough, it didn't. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, a little bit useful, maybe some entertainment value in there as well. Until the next time, we'll see y'all later.